Whoa! The microphone is working. Test, test. Happy there is no. Okay, you all here? Try to find a seat somewhere where you can see and hear us, even if the microphone is not super charged. Jesus Christ. Have we figured out the microphone? I think it's almost good now. Can you all hear me? Yeah. Okay, then I want to hear you. Welcome to Crypto Hub Malta! And remember, none of this is financial advice. I'm really going to say today, because what the speakers are going to talk about might sound a lot like financial advice, but it's really not. So don't forget about this, okay? My name is Ferris. We are at Crypto Hub Malta at Soho office. Do you know what this place is? Do you know where we are? What is this? Soho office is a co-working space. Did you know? In the first floor they have a gym and a spa and like a shower facility. They have in the second and third floor offices that you can rent and hot desks where you can sit at work. And here on the fourth floor they have the event space. This is where we are. So if you ever look for an office, go talk to the managers at the bar and they will happily tell you how great they are. We are Crypto Hub Malta, and Crypto Hub Malta is the blockchain native community of Malta. We are on the internet. This is our website, cryptohubmalta.org. Go check it out. We are also on Facebook, meetup.com, and Instagram. Now, how many people are here today? Maybe 20, maybe 30, maybe a little more. How many people liked that post on Instagram? 11. Jesus Christ, guys. Every week we do this, it costs nothing. Just go and click once per week, please. It would mean the world. And it would also help other people to find this place. Because we cannot always tell everyone, but you can. So, let's do this. Now, before we get started tonight, there's something that I want to address. If I find my notes for tonight, and here they are. So, Charlie Munger is a person who did not like Bitcoin, but he's also a legend, an investor, and he passed away today. Do you know this guy?
For real, he died?
He died today. So, tonight we are going to talk about different kinds of investment. We're talking about traditional investment, and he was a master of that. We're also going to talk about Bitcoin and alternative coins. But one of the things that he said, he did not talk kindly about Bitcoin, but one of the things that he said is, the big money is not the buying and the selling, it is the waiting. And this is a universal truth that applies to traditional investments and to crypto investments. It's not the buying and the selling, it's the waiting. This is something he said. And it applies very much to Bitcoin, because if you're looking at the cycle of the 4 years of the Bitcoin halving, are you familiar with that? Are you familiar with the cycle of the halving? In April 2024, there will be a halving of the Bitcoin rewards that are issued at every block. So the inflation or the drop of the Bitcoin at every block that is mined will be reduced, and just the scarcity goes off because there's less on the market. And normally this was the biggest indicator, the biggest trigger for the next bull run. So if you manage to wait at least 4 years until the next halving, normally you are always in a plus. So it's not the buying and the selling, it is the waiting. That's what he said. He passed away, he was a legend, the late Charlie Munger didn't like Bitcoin very much, but he also said, those who keep learning will keep rising in life. Those who keep learning will keep rising in life. And with that, we start with the first presentation of Oliver. Off you go!
Hi guys. Hi guys. Hi guys. So, thank you for having me here today. It's a real pleasure to connect with a group full of finance and tech enthusiasts. And before we dive into the heart of our presentation, a few words about me. My name is Oliver. I'm from Poland and working as a broker, as a relationship manager at Broker Trade Europe. in Malta, in Slima, from our office, from where we provide traders access to thousands of different instruments around the world. And, you know, I am a bit in between traditional and alternative investments. I wrote my master thesis a few years ago comparing those two worlds. And since the topic is relevant as ever, I hope you will find it interesting. And at the beginning, I want to ask how many people here are already trading, investing? Can you put your hands up? Okay, quite a lot. Impressive, guys. So I hope that this topic will be interesting, especially for you. And let's move to the most important. This is not financial advice. Sorry, guys, classic disclaimer as always. And you know, I will not give you a secret tips on how to become billionaire very quickly, how to drive Ferrari or Lamborghini. No. However, I will try to give you a better picture of few financial instruments from which you can draw your own conclusions. And there are thousands of different instruments among traditional and alternative investments. So of course, it's impossible to cover everything in a short presentation. That's why I chose 3 instruments to highlight. Firstly, S&P 500, which definitely can be considered as a representative of traditional investments. The index is a collection of 500 largest companies in the US. So we can say that in a way it's a barometer of the state, of the condition of US economy, or even a global economy, right? Secondly, gold. Gold is also a bit in between traditional and alternative investments, because one's closely related to the monetary policy, to major currencies like dollar. However, there is a limited amount of gold. So today, Bitcoin is referred to be as a digital gold. And finally, indeed, Bitcoin, the most popular, the biggest cryptocurrency around the world, and it has become the symbol of the entire industry. So today we will refer to that. And so firstly, we'll compare the profitability of investments over the last 10 years. And when I'm saying 10 years, I'm thinking about full years. So I didn't count 2023, as we didn't finish it yet. And I took data from 2013 until the end of 2022. And in the next section, we'll move on to the comparison of risk. So let's go. Every investor wants to know how much they can earn per year. So let's look at the historical data, which of course doesn't guarantee any future results. However, it can give us some very interesting insights about the future. And as we can see from our table, Bitcoin recorded the highest return most often, 6 out of 10 times, S&P just 3 out of 10 times, and gold just 1 out of 10 times. However, when Bitcoin is losing its value, the loss is significant. Only last year, that was minus 70%. There is also one more thing which I want to emphasize, that the performance of S&P 500 is the most consistent. So it means that in 9 out of 10 years, its value increased, which is very impressive in the world of finance. And as we know the annual average performance of S&P, gold, and Bitcoin, let's look at the cumulative returns. And you know, for gold, it's around 0%, not the best. For S&P, around 200%. Quite good, quite good. And Bitcoin, just crazy number, okay? I will not read it, it's crazy. So definitely, Bitcoin outperformed other financial instruments over the last 10 years. However, 2 things. Firstly, Bitcoin started from the very low price in 2013, just a few bucks. Secondly, to have a complex overview of investment, we have to assess not only the profitability, but also the risk. So, in investing or trading, profit and risk are absolutely complementary. And appropriateness risk management can help us eliminate losses in a large extent. And this is something what Caroline wasn't aware of. Her example and FTX case, which probably most of you still remember very well, right? That was like 1 year ago. It can show us how important the proper risk management really is. And one of the basic measures of investment risk is standard deviation. This is because risk is closely related to the volatility in a given market. And it means that smaller or lower standard deviation means that the market is calmer and more, let's say, predictable, which of course can be easily associated with lower risk. And as we can see from our data, standard deviation for S&P and Bitcoin and gold is much lower than Bitcoin. This means that according to this particular measure, investing in Bitcoin seems to be very risky compared to others. And every investor should also bear in mind that the risk of portfolio depends not only on the risk of one individual investment included in it, but also on the degree to which those investments are linked. So, we can see in our table that all those three instruments are positively correlated. This means that in case of, let's say, some positive political, economical, or social events somewhere around the world, the price of all these three instruments should increase. And vice versa, in the case of negative event, the price of all these instruments should decline. However, the impact will be not the same. So still, it seems to be a good idea to diversify portfolio by buying from different assets, like maybe a bit cryptos and commodities like silver, gold, maybe some oil, or maybe cryptos and stocks or ETFs, or even everything together. Because this is based on a general rule, maybe even the rule number 1, saying don't put all your eggs in one basket. I think that's very clear, guys. And today we have seen a number of statistical metrics and numbers that allow us compare better financial instruments. But at the very end, I want to present you an indicator that allow us compare the profitability and risk together. This method is very often used by hedge fund managers, institutional traders, or investment bankers, because Sharpe ratio seeks to characterize how well the return of an asset compensate the investor for the risk taken. So when we comparing two different assets or two different portfolios, the one with high Sharpe ratio appears to provide better return for the same level of risk. And as we can see here, even despite very high risk on Bitcoin, still that was one of the best investments over the last 10 years. But again, we have to remember that Bitcoin started from the very low price, so to keep same performance or even a similar performance in the next years can be very difficult or even extremely difficult. That's why, in my personal opinion, it's always good to diversify to find our own risk-profit balance. Thank you, guys. That was a pleasure. Here you have a QR code to my personal LinkedIn, to Trade Europe, where I work. And if you are interested in investing or trading, just contact me, let me know, and I will try to give you the best possible conditions on the market. So thanks again, and that was a pleasure. So if you have any question, raise any question.
Are there any questions? There's the first question here. Put your hands up.
Thank you, dear. Just to make some sense further, how do you consider the correlation between the rates in the last 10 years, the money supply in the last 10 years, and the price of the assets? Thanks.
Yeah, so here in the presentation, I made the correlation of the returns. So of course there is a lot of different factors which can influence, the correlation and in general how the prices are moving in the market. Of course we can compare many things and do correlation of many things. So it's difficult to cover everything in a short presentation. but definitely it's something what we should consider as well, especially in long-term investing. Is that was a good answer?
No answer.
Okay. Is there any more questions?
I have a question. So why do you compare the S&P 500 with Bitcoin?
Sorry, could you repeat?
Why do you compare the S&P 500 with Bitcoin?
Okay, I compared those two assets or even three assets because they are very iconic. So when we're thinking about investing in stocks, we think S&P. When we're thinking about investing in cryptos, we think Bitcoin. And the same with commodities, I choose gold. But of course, we have many different asset classes like cryptos, forex, stocks, bonds, commodity ETFs. So of course, we can compare this, or even more. We can go further and compare art or investing in wine, which I am really passionate of that. But I think most of you are interested in cryptos and stocks. That's why I chose those instruments.
Are there more questions for Oliver? Okay, follow-up question here.
I have another one that is, you push me on this issue a lot. Why do you consider the price of these three assets in dollar? Because you're talking about three assets, but instead you're talking about four, because you make the price of those in dollars. If you make the same, correlation models, taking us the reference price in Bitcoin, how would you see the other two assets or three assets in comparison? Thanks.
Yeah, so actually it's a very good question. That's true that there is also a dollar behind all of that instruments, but we compare those instruments in dollar because the valuation of all of those instruments usually is in dollar. I mean, for S&P, it's just a point. For gold and Bitcoin, we usually use dollars. That's why I think it's the clearest way to show us, to show you how the real correlation, real standard deviation looks like. Because all of us can imagine how much is $1 or €1. So that's why I think it could be more easy to understand.
Okay, if there are no more questions, are there? There's one last question here.
So when you invest in crypto, you're putting a bet that it will be used more in the future. So you're investing and there will be more usage. What do you think the use will be down the line? Do you think we'll have more crypto usage, or do you think it will remain where it is?
Yeah, I think definitely the adoption of cryptocurrencies will be, deeper and deeper. So we should consider as well this point when we invest in cryptos. But again, rather if we invest long term, we just hold cryptos. So maybe it can be more important because the adoption is not like today and tomorrow. It can be like years. So even today, the adoption of Bitcoin it's still, most of you would like to pay by Bitcoin even here, but still it's not possible. And maybe in the future it will be possible, and it can increase the price of the Bitcoin or another cryptos, definitely, but we don't know when it will happen.
I love that, Oliver. Bitcoin is going to 1 million, but we don't know when. It's not an if, it's a when. Okay. Thank you very much, Oliver.
Thank you.
Now, we are going to continue with the second presentation of tonight, and the speaker is someone who's not so famous in Malta, but he's very famous in Macedonia, because Antonio is the biggest crypto educator in all of Macedonia, and it is an honor to have him here in Malta with us. Everyone, a warm applause to Antonio.
Now, on the start, I would like to introduce myself. I am Antonio Georgiev. Currently, I do not work in the crypto industry, so full disclosure. And as everybody else, this is not a financial advice, as you know. But if you don't mind, before I start, I would like to answer your questions, if you don't mind, because there were your question about the dollars and your question about the crypto, if I can. Because this is a bit different view. So why dollars? Dollar is currently, like it or not, still the reserve asset practically value of the world, right? So everything trading right now is still in dollar. And if you're choosing any other value right now, let's say euro, yen, choose whatever you want. Everything is in decline when you compare it to the dollar right now. So the trade in the world, everything is represented in dollar. Doesn't matter if it's crypto, if it's I don't know, gold, or let's say S&P 500, Nasdaq, whatever you name it, everybody is comparing it in dollars because still it is the reserve currency of the world. And that's the easiest way to practically trade, because if you're trading in euros and you're talking to somebody from Tokyo right now, it wouldn't be logical for you to compare in euros something that he's used to see in yen, right? Same situation goes for the world. Unfortunately, depends on who sees it which way. The dollar is still the reserve currency, and for now, definitely everything will be measured in dollars. And regarding the crypto, so you know how, it depends how you see it. Sorry? Okay, so you guys can hear me? Okay. Depends how you see it. Why? When you see it from a traditional point of view, when we have people that are, let's say, investing in the traditional finances, crypto is still, you know, this the black sheep on the side. When you see it from the people that are early adopters in crypto, it's a completely different situation. Why? Because this is a disruptive technology that is coming and taking over the world. You mentioned Charlie Munger, right? So why do you think Charlie Munger made so much money? Because, for example, they are the first ones that saw the potential of Coca-Cola, right? So they bought when nobody actually wanted to buy Coca-Cola stocks, right? Same situation here. By waiting to practically get a global adoption, what's going to happen? When the global adoption comes, you're going to be already too late. It's the same with the normal cycle of Bitcoin. When nobody talks about Bitcoin, this is when you buy it, right? But when everybody starts talking about it, as people were saying, when your grandma asks you, what's this Bitcoin thing? Then it's too late. So practically already my friend missed the train. Unfortunately, that's how it works. So in this case, I will just tell you this. Regarding this kind of technology, would you wait until they tell you on the TV that you need to buy it? Or you want to buy it before they tell you? That's up to you. But again, not financial advice. Now, to my colleague that he was actually talking about traditional finances comparing to the king of crypto, which we know is Bitcoin, we're going to go one step further. So we're going to talk about Bitcoin and altcoins. Now, just for us to practically make it basic, first we're going to explain what is Bitcoin and then what is altcoin, because I can imagine maybe some of you have never actually heard about these kind of things. Now, Bitcoin, we all know, I don't think that somebody here doesn't know what's Bitcoin, right? We all know. So it's the king of crypto. This is the first cryptocurrency. It's still the most decentralized and most secure cryptocurrency in the world. And it is practically the first cryptocurrency on the market. Now, the first mover in the market, we all know how important that is, right? When somebody invents something and comes on the market, he's already taking most of the share of whoever is buying this, right? Because he was first on the market. He had the technology. He literally took over the market before whoever comes as a competitor. Same situation goes with Bitcoin. So, the altcoin is actually any other cryptocurrency beside Bitcoin that came after Bitcoin on the market. So, I can imagine you know some, but please don't tell. Like, what I'm going to ask you now, anybody to just give me any altcoin, please don't say Shiba or Dogecoin, please. So, can somebody tell me any altcoin that you know? Anybody else maybe knows some altcoin? There we go, Flux. Somebody else? Very nice nodes. One of the most profitable nodes of last bull market. No? Anyway, we'll get there. So, XRP, there we go. Very nice example of financial, practically this is a cryptocurrency that is considered as a currency for transactions through different borders, but very nice. Now, practically any other currency except for Bitcoin, and there are thousands of cryptocurrencies right now, is considered an altcoin. So whenever somebody is saying to you altcoin, it means any other currency except for Bitcoin. Now, there is different ways how you can practically separate the cryptocurrency. You can separate them by category, you can separate them by market cap, you can separate like different kind of types, right? The most important ones are, according to me, the market cap, which is practically how much money is invested, which we're going to talk right now, and the category. So, category means what kind of a problem this altcoin is trying to solve in the real world. Because there is no point of having a technology that cannot solve a particular problem in the real world. Otherwise, what's the point, right? If we have a solution for this kind of a problem in the real world, there is no point of this technology, right? So this is the disruption that the altcoins is doing to the real world, and that's why we practically need it. That's why we're investing in it. And this is the second one, which we're going to be paying much more attention right now, because I've seen a lot of presenters here, but almost nobody is speaking about the financial potential of this kind of, let's say, investment. Now, as I said, this is not a financial advice. This is just my point of view of how, for example, you can invest in the cryptocurrency beside Bitcoin, because most of the people are talking Bitcoin, 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 Bitcoin. Now we're going to see what's the potential of investing in Bitcoin and in the altcoins as everybody else except for Bitcoin, right? So for us to understand this, we need to understand two things. First is the market capitalization, which is the total dollar value of all the shares of a company stock, but since this is not a company stock, it's the case of Bitcoin or any other cryptocurrencies of all the coins that have been mined. So you know that any cryptocurrency, no matter if it's Bitcoin, Ethereum, Polkadot, Cardano, whatever you prefer, they have a certain amount of coins which are practically in circulation that we are using to trade, to invest, to buy, to hold. Anybody has a different way of using it. On the other hand, this is very similar to a company stock. This is how you're going to understand it better. Let's say that Apple did, I don't know, 100,000 stocks, right? So practically what they did is they did 100,000 stocks that they're going to give to you in exchange for money, which later on they want to use to, for example, make the business bigger, I don't know, make the production bigger, from which profits you want to get something back, right? This is the way, this is the reason why you're investing in stocks. So you're buying part of the actual company. Think of it this way. In the case of altcoins and Bitcoin, by buying this kind of coins, you're actually buying part of the technology. So the difference is that when you're buying Apple stock, this is just a number on a screen. Why? Because you're buying it, and if something happens to wherever you're keeping it, because this is not like a non-fungible token. Let's say you're buying on El Toro, one of the most popular in Europe. This is like a special exchange where you can buy stocks. If something happens to El Toro, you are left with nothing, right? If you don't go over there and buy it in an actual written form, you don't have anything. The difference between stocks and cryptocurrencies in this case is you can actually have it on your own ledger. In this case, practically, you actually own the part of technology. So whatever happens to exchanges or anything else, you actually own the part of the technology beside where you bought it from. So where we're going from here. Now, this is how it practically works for you to understand the correlation between an actual company and practically altcoin or any other crypto technology. Practically, you're buying part of the actual technology. Now, the second part is the circulating supply, which means how many of these coins or tokens are actually put in circulation for you to actually trade, buy, hold, and etc. Now, in this case, for us to actually understand how the price works, what we need to do is we need to divide the actual market cap, how much money is invested in this project, by the circulating supply, how much coins there are in right now circulation around the world. This is, for example, one of the pages that I'm using for this reason, which is CoinGecko. There is plenty of them. That's why I put like several examples. Coin Market Cap, Coin Paprika, you name it, there is plenty of them. Now, why do you need these kind of pages? Because they actually help you to do this. You don't need to bother yourself to actually do the math yourself. They already have done it for you. Now, as you can see, over there it's already inputted the actual price of the coin and the actual market cap. So they did it, you don't need to bother yourself. If you want to check it, click on any of these coins and you can actually see the statistic of the coin itself. How much it has in market cap currently and how much is the actual supply that people are trading between themselves. Now, where do we go from here? Everybody talks about the potential profits in Bitcoin. Okay, nobody says that there is no profits. There is a lot of profits, and in this case, we're talking about very safe profits. Maybe not as the S&P 500 and Nasdaq, but still very safe comparing to the altcoins. Now, this is where we come to the point that we need to practically see how much of a risk you're willing to take when we're talking about disruptive technology. Now, before I continue, I will just tell you this. You know who are the most rich people in America to this day? The people that invested in the actual railroad when it was not connected to from the east to the west coast. But at that time, if somebody told you we're going to build a railroad to Indian lands, where we need to go with practically an army behind us just to build a railroad, they will tell you you're crazy, right? So practically you're ahead of the curve. You're understanding that by building this thing that is not there and it's needed, you're going to be ahead of everybody, you're going to own it. So you're going to have a monopoly over it, right? The same situation goes here. This kind of technology will be used in everything. We're not talking about finances because most of the people think that this is going to be only finance. No, it's going to be used in everything. You can find today technology in the crypto that can be used for online storage, that can be used for transactions, as he said, for example, XRP, through borders without any disruption. You can find any kind of possibilities in this technology, but we're not going to talk about it today. What I wanted to say is that by seeing this thing before it happens, you would have been very rich right now. Not a lot of people did that. That's why I have this cycle where you can see the whole price of the beginning of Bitcoin to the current time where we are right now. Now, what I want to show you here, the thing I'm trying to explain to you is the diminishing returns. As my colleague already mentioned, the diminishing return means that more money gets into any kind of capital good, it starts practically losing the potential gains it can do. Why I'm saying this? So as you can see over here, I already marked the bottoms and the tops of every cycle of Bitcoin so far. We're not going to talk about halving cycle. We're going to talk about economical cycle where we determine the lowest and the highest point in a certain time frame. Now, as you can see over here, the first cycle, which nobody even know about, let's be honest, who here invested in 2009? If you did, you wouldn't be here, right? So in this case, the first cycle, they managed to do 317,000%. So if you did invest $1 in Bitcoin, you would have had, at the end of this cycle, $370,000, right? Now, if you go further on, you can see that in every cycle, the percentage of gain was actually diminishing. Second cycle, 59,000. Third cycle, 11,000, almost 12. And the last cycle from 2019 to 2021-22, 2,100%. It still beat any capital good that you can find in the traditional market because it's still new on the market. So there is not a lot of money entered in the Bitcoin, right? Now, for you to see how much money enters, so you can understand the correlation between the gains and how much money entered, the first cycle, we're not going to count this cycle because over here, again, there is no cycle. People just invented it, right? So the first cycle, which is practically this one with 59,000, Bitcoin gained $13.6 billion of market cap. That was the top where we got 59,000%. The second one, we retraced from 13 to 2.3 billion, and then we jumped to $323 billion in this cycle. So this is how much money entered in Bitcoin, how much money was invested in Bitcoin. The next cycle, again, we practically did a correction to 56 billion, and then we went to 1.27 trillion, which was the top of 2021 bull market. Now, what we need to understand here, we already have the bottom. So I think everybody here can agree, whoever is investing, the bottom was done. That was practically during this year at the beginning, let's say. And we went to $320 billion. Now, do you see where this goes? Which means we cannot expect that from here we're going to do like, I don't know, 500,000, right? Like this is one of the things that people need to understand when we're talking about investment in crypto. As you can see, the diminishing returns are continuing, right? So whatever we expect, we're not going to expect even 2,100%. Now, this is where we go to the altcoins. This is where we need to understand what is the potential next step in investment in the crypto industry. Because the altcoins, as I said, from a point of view of technology, this is a completely different subject we're not going to approach today. We are going to talk about the market cap of these altcoins, because every one of these altcoins has their own market cap. I'm going to go back just to this so you can understand. So as you can see on this list, you have different kind of altcoins, which again, we're not going to discuss. It's a lot. If I continue, we're going to be here 12 hours. Now, in this case, you can see, for example, Ethereum, XRP, Solana. This is the market cap that they have right now. So as you can see, comparison to the market cap that Bitcoin has, we have a lot less money invested in XRP, in Solana, in Cardano, which means that the potential gain of these projects going up is a lot bigger than the potential gain of Bitcoin going up. I'm not saying don't invest in Bitcoin. I'm saying that you need to diversify your portfolio so you can practically adjust the risk to the potential gains in the next bull market, whoever wants to invest, obviously. Now, we go to the point that we need to explain what kind of cryptocurrencies are there depending on the market cap that they have. The first one, as you can see, is the blue chip. That's how it's called. Now, this is a technology project that already proved their place in the cryptocurrency. In this case, the ones that I already mentioned are actually blue chip. Ethereum, XRP, Solana, Cardano. That's why, because they have more than $10 billion invested in these projects, which means that a lot of people actually believe that these projects will grow, that they have a practically place in the world, that they really have some kind of a problem that they are solving. Now, as you can see, this goes further down. As I said, if you go to these pages, you can find on the 5,000 page some kind of a coin with market cap of, I don't know, $3,000. But the most important ones, as you can see, the next one is the mid cap, which is from 1 to 10 billion. They have the small caps as well, which are below 1 billion. And this is the three, let's say, categories that if you look at this chart, these are the three categories that you can see over here as well, right? Because Bitcoin went through this cycle as well. If you've been following, let's say, the last bull market, we had outperformers like Solana that just showed up that bull market and literally blew the place off, like 5,000% gains, right? We can see this is nothing new. This happened before on the market. Just the problem is in which of these cycles of diminishing returns the altcoin is actually in. Because we can see that more money come into the altcoin, more it loses from potential value in the future. Obviously, we're not talking here like, for example, AVAX was currently adopted by JP Morgan, believe it or not, and Citi, and was adopted, and it was like crazy gains for one day, 70%, right? So in this kind of cases, we're talking about a fundamental analysis of something completely changing the whole surface that we are currently used to, right? These kind of cases, they always give you different kind of gains. We're talking about normal cycle where we don't have this kind of explosive news. So in this case, what I'm trying to, let's say, get to is how you practically differentiate your portfolio. Now, this is a classical way of differentiating your portfolio, where you need to decide, if you're investing obviously in the crypto sector, how much of your portfolio you want to put in the lowest risk, which is actually the lowest reward, which is normal for everybody that is investing. In this case, we're talking about, let's say, investing 50% of your portfolio in Bitcoin. Why? Because we know Bitcoin is not going anywhere. For sure, it's not going to go to zero, as much of those gold and whatever lovers. This is just a wet dream. But it's not going to be the only cryptocurrency in the world as well. This is also a wet dream of the Bitcoin maxis. So every one of these, let's say, cryptocurrencies that prove themselves and then find a proper place for them in the society will eventually succeed. Just the problem is how much it's going to succeed, which is something that you need to practically find out. But when we're talking about the market cap, this is how it looks like in a normal portfolio. Then let's say you allocate 30% to medium risk, which is actually the above 10 billion market cap coins. Then we have 15%, which is, let's say, the mid cap, which is 1 to 10 billion. And then we have the very risky 5%, which is the small altcoins. In this case, is up to, let's say, $1 billion. Now, there is a lot of people that for sure have heard, let's say, less bull market. You've heard this phrase, Lambo, right? To the moon, for sure you've heard it, right? So what this is about, the problem with the microcap cryptocurrencies, which are actually the most rewarding ones, is finding a gem. That's how they put it this way, the YouTubers. Finding a gem that is, let's say, I don't know, 10 million and it grows to 1 billion, right? So you did like some crazy amount of profits, I don't know, 100,000%, right? The difference is most of these people that are actually investing in this kind of microcap cryptocurrencies, because we're talking about untested technology, there is some kind of a speculation, end up without anything. But the problem is that most of the time you do not hear about them. You hear about that one guy that put, I don't know, $100 in Dogecoin and then he bought a Lambo. This is the story that they're telling you. So in this case, you practically need to, let's say, ask yourself, do I want to invest in projects that are, let's say, not that much potential when we're talking about reward, but in the same time, a technology that will revolutionize the world and will give me part of this technology to hold in my pocket, not on El Toro, in my pocket, right? Or you want to search for these micro-cap cryptocurrencies, 1 in a million, and think that you're going to win the lottery. So practically somewhere between these, let's say, 4 categories, you need to find yourself and you need to see what, according to you, are the projects that will actually make it in this world, and what, according to you, is the project that actually going to bring you the most profit depending on the risk that you are entering in. Now, as, let's say, finishing thoughts, I would definitely, let's say, read out these ones because they are very important. Now, depending if you are an investor or trader, you have different setup of your portfolio. As you know, a lot of people work differently in this kind of a sphere. There are some people that trade on a daily basis, so most of the time they don't even hold crypto. They buy crypto on a position and they exit the position once they do the actual profit that they're expecting. But generally speaking, according to this, obviously you're gonna have a different setup. If you're an investor, then it's a completely different story, right? You're most of the time already all in crypto, especially in this side when the, let's say, bottom is behind us. Now, depending on your risk appetite, you might want a different portfolio setup. As I said, this is just the basic portfolio setup, which most of the time, whenever you ask somebody to explain to you about risk, this is what they're going to show you. But it's up to you to practically do your own investigation, your own research, and to see what, according to you, is the risk that you want to take in this kind of a situation. And again, don't forget, this is a disruptive technology, something that is coming to change the world. And if you don't believe me, ask BlackRock. Or you can ask Vanguard, or you can ask Fidelity, which are the 3 largest corporations in the world. I'm not talking Apple, they own Apple. These are the asset under management largest corporation with trillions under their management, which currently, let's say Larry Fink. Larry Fink in 2018, there is a clip where he comes and says, cryptocurrency is just a gauge to see how much money laundering is there in the country. And right now, Larry Fink is on every TV in the world, the messiah of Bitcoin. He says cryptocurrencies will change the world. There is nothing like Bitcoin. The same guy, 2018. The same situation is with the biggest banker in the world. So this is the biggest capitalist. Then we have the biggest banker, which is JP Morgan's Jamie Dimon, one of my favorites. Now this guy, in 2018 bull market, came out and said like this: if I find any of my traders, this is the biggest bank in the world, JP Morgan, buying Bitcoin, selling Bitcoin, trading Bitcoin, he's going to be right away fired because he's stupid. This is a sentence coming from the biggest banker in the world. Right now, a week ago, the guy just gave a position to Avalanche, one of the, let's say, newest cryptocurrencies that just started the last bull market, to practically help him with the setup of the, let's say, when you make, let's say, profit in anything that you invest in JP Morgan, Avalanche will be the one distributing this profit to your portfolio. The same guy, 2018, I'm going to fire anybody. The same guy right now, and they even have their own ledger called Onyx, which is a private ledger, but still, don't trust what they say, see what they do. So in this case, don't wait until they tell you, because in that case, they're going to be selling you cryptocurrencies by the price that they will be telling is the right price. And always make your own research when choosing the projects in which you want to invest, which is a completely different subject, but maybe we can cover it in some other, let's say, day. Not your keys, not your crypto. This is one of the things that everybody needs to know. So do not trust Binance, Kraken, Coinbase. These are all just companies. Keeping your crypto in this kind of company is the same like keeping money in the bank. If the bank goes under, most of the time, if you don't have any kind of insurance, your money goes with the bank. If Binance goes under, no matter how CZ is good or bad, your money goes with CZ. So in this case, keep your crypto safe on a cold wallet. And just for you to know that I'm not bullshitting you, this is practically how I show my channel, what I invest in, when I invest in, and how I buy. So these were my buys. As you can see, I've been buying since June. Practically all these buys are actually until I have allocated 100% of my portfolio from the previous bull market. And these are the projects, as I was saying. This is the second type of, let's say, categories, I would say, that you can actually differentiate the cryptocurrencies under. As you can see, there is a lot of different categories in which the cryptocurrencies are helping the world solve particular problem. As you can see over here, we have store of value, which is obvious Bitcoin, but there is PUBG as well. Most of the people think that only is Bitcoin and that's it. This is a stable coin connected to the price of gold. Then you have digital currencies, the same that the gentleman said, XRP, we have others as well. Exchange coin, Internet of Things, which is very important for the world. DeFi, lending, borrowing, IE, metaverse, etc., etc. But this is subject for some other day. So I think that you've enjoyed my presentation, I hope. And I think that I did my best. I hope that you maybe will call me next time. You never know. Any questions, guys? Please.
What are
Antonio,
your strong opinion?
First question, but I want to say, this sounds a lot like financial advice, man. It sounds a lot like financial advice.
That's my opinion. As you can see, I'm not bullshitting you. Everything is here. And I've been disclosing everything on my channel. Every time I buy, everything I sell. So as you can see, I am telling as it is. This is just my opinion. This is what I do on the market. Obviously, you need to do your own research.
Well, first question here.
Please.
Thank you. DeFi, you intend to increase the portfolio because right now
Speak in
it's...
the microphone, please.
Yes, of course. Thank you. So, DeFi, right now it's 0%, right? You intend to increase that area. What's happening?
So, why is it like this? I'm going to tell you. I have the strategy of differentiating my portfolio as the bull market progresses. Why is this like that? As you know, every technology has its, let's say, champions. In this case, for me, from what I've seen for the last two bull markets, the champions are the layer ones. We're talking about Ethereum, we're talking about ADA, DOT, Solana. Why is it like that? This is the infrastructure that builds the next crypto, or as you name it, all these categories. So in this case, what I did is, because the same champions of the cryptocurrencies right now, which are the layer ones, are also the biggest holders of money currently. The biggest large, let's say, the market cap of these currencies is the biggest. So for this reason, I am currently holding this amount in the layer ones, which will be differentiated later on as we progress in the next bull market, because comparison, let's say take Aave in this case for DeFi, one of my favorites. The market cap is very small. So if anything happens, this is how you practice, this is what I do to minimize my risk on this market. I do invest in the biggest coins right now, the blue chip, to minimize the risk of potential fall down. Why? Because you never know when you're going to have a black swan event. This is an event like COVID, let's say, right? Or a new war, or anything that can practically crush all the markets, not one. Like, for example, if currently the war in Palestine and Israel escalated, and we're talking about blockages of, let's say, delivery of oil, all the markets crash, including the most risky ones like cryptocurrencies. And if I do hold biggest part of the portfolio in the layer ones, they will crash the least. Because you know how they say, when Bitcoin sneezes, the whole market practically catches a cold. Why they say this? If Bitcoin loses 2%, most of the time the altcoins starting with the layer ones, they use 4%, but the rest they start losing more as the market cap is smaller. Why is this? Because everybody that is thinking the same way, they say, you know what, if something like this happens, I'm going to change everything from the smaller caps to the bigger caps to prevent this kind of loss of my portfolio. So I do not sell, I just keep my, let's say, investment in the largest caps so I can prevent this kind of risk, because we are still not in the full-blown bull market. The halving is not here. So later as we go, I'm going to start differentiating the biggest ones they have into categories like, for example, right now I can tell you definitely, I'm going to go for sure in Chilis. This is one of the Maltese projects which is amazing because it's practically sports. This is the champion in this era. If you go down, DeFi, Aave for sure. Everything else practically failed. Aave so far is bulletproof from what I've seen. I'm going to definitely go into Aave as we progress later on. I want to also, let's say, artificial intelligence, for sure I'm going to go into that field because at the beginning practically of this year it showed the potential it has. Especially AGX, for example. Send, Metaverse, for sure. But so far, because we're still in these risky waters, they still are talking about potential global recession and all these things that can crash the market. So for this reason, I'm still there. Sorry for the long time.
Sorry.
Follow-up question, short follow-up question.
Why would you go for XRP?
Have you seen what they've done so far? I know, it's one of the most centralized projects, not even a question. If you ask me, in this case, I'm purely profit-oriented. They currently hold a seat on the table of ISO 2022, which means that currently they will be setting the standards for the next banking messaging system, which comes into effect November 2025. And they have a seat at the table. These guys currently have a CBDC platform in which 10 countries already are doing sidechain on XRP Ledger for their whole economy. Can you imagine? And you know which these countries are? Russia, Japan, Uruguay, and then we have some smaller ones like Palau and, you know, Marshall Islands, but the biggest ones, can you imagine the whole Russian economy building a side chain for CBDC on XRP Ledger? And you can check this. They actually came out, they have a special, let's say, how can I say, segment of their company, which is purely connected to this kind of, let's say, projects, right? So tell me that this is not big. In the same time, they beat the, I'm sorry about the next one, they beat the shit out of SEC. So they're coming strong on the next bull market. And let's not forget that they are still champions in over-the-border transactions. So this is the main thing. There is a lot more, plus IPO. They're going initial public offering very soon after the end of the case.
Okay, question out there?
I don't need the phone, don't worry. Thank you for a beautiful presentation.
No, I don't have to scream so loud. Okay. Thank you for your beautiful presentation. I surely learned a lot, especially from the very last slide you did. This is a very handsome compilation and compression of maybe an interesting setup. The first question I had was almost answered about XRP, so I would jump into my second question right away. As you mentioned Solana before, which is a coin that has an impressive growth in the last few weeks, I would say. And if you do invest in this, I'm a newbie, I don't know all the backgrounds, but like I heard that the chain was down 7 times, that they have technical problems. And I mean, how serious can you take a coin which is like not a stable coin as such, but and how much does it matter on your investment ideas and decisions? Thank you for your comment.
So practically you want to know more about Solana, right? Okay.
Well,
As you can
is
see-
Avalanche better?
Yes, I tell you Avalanche as well. But as you can see the table over there, actually people that are watching my channel, so they know my opinion about Solana, but let me repeat it again. The biggest problem that I see with Solana is, we have projects like Avalanche, which have never failed. They have 100% running time. In this case, you need to consider that these are machines running the blockchain in the background. So it never failed. So far, it's bulletproof. In the same time, Solana was falling once per week. So we had like every week once Solana fall, you know, like ridiculous. For a blockchain, this is like unacceptable. And in the same time, they were saying we are the fastest blockchain, we're doing this, we're doing that. And they were like, can you imagine what's the point of having the fastest blockchain if it falls once per week? Now let's put that aside. Now, can you imagine they came with there was like a news. Congratulations, Solana haven't fallen for 4 months. What can I tell you guys? Haven't fallen for 4 months. So this is what you're going with. Now, they have very big institutional backing. I really cannot understand where it's coming from, especially the next thing that I'm going to tell you. This was the darling of FTX. Now, we all know about FTX. The gentleman before showed the risk management team of FTX, right? So we know about what happened there. Now, the problem is that what people still don't know, there is millions of Solana tokens currently, which are locked in the vesting schedule, which will be released over time to FTX. And FTX is currently in bankruptcy procedure, which means that all these tokens that are coming to FTX, trust me, nobody will give this to the people as Solana. They will just turn them into dollars and they will give them as dollars. Take an example, Mt. Gox. Mt. Gox from 2014, finally they started paying out, but they're not paying out Bitcoins. People were expecting they will be paid in Bitcoin. They're paid in dollars, which means it will be liquidated. We're talking about millions of tokens of Solana, which will be liquidated over time to pay whoever actually owes something, in this case, FTX, to their lenders. So again, I'm not saying that this is something that you need to listen to, but these are the reasons why I'm not investing in it, you know? If you compare other projects that are kicking ass, and you compare Solana, which is just practically they pushed it. FTX pushed it big time. It was ridiculous as bull market. Out of nowhere comes this blockchain, promises everything in the world, and fails every week. So, and Avalanche, great project. If you ask me, one of the best ones so far, because it never failed. And we're talking about layer 1 solutions. Think of it this way. Let's say, for example, on Solana, there was one game. You can kill me, I don't remember how it was called. But there was a lot of users of this game that say, when the blockchain falls, you cannot play the game. Even if you have something in the game, we're talking about actual capital, you cannot take it out because the blockchain is down. In the other way, we have Avalanche, and again, the stamp of approval in this case comes from JP Morgan. There was a 70% raise, which is ridiculous, but it was true because we're talking about the biggest bank in the world saying, you know what, this is a technology that really is good. So in this case, my advice, take Chainlink for an example. Swift stands behind it, right? Find the projects that we have these big players that are standing behind. This is not for nothing. BlackRock just applied for Ethereum spot ETF. Guys, you cannot get bigger badge of approval. This is the stamp of the big guys. Something else?
Antonio, thank you for your perfect presentation. I'm sure that many of us learned something new today. During your presentation, you several times mentioned that the bottom is in. Why? The reason you think that, and if you think that the bottom is in, where would you enter the market again if you were an investor or something?
Thank you. Wonderful question. Now, in this case, what I would tell you is, Bitcoin has this magical thing called Bitcoin halving. Nothing in the world has a cycle as Bitcoin. Why? Because the Bitcoin halving comes once in every 4 years. S&P 500, NASDAQ, gold, nothing has a cycle like Bitcoin. And we're talking algorithm which is spotless. It goes on a certain amount of blocks, it just halves the reward and it halves the inflation as well. Now in this case, first from this point of view, if you look at the halving, as you can see, these are all cycles from the halving. Spotless, so far never failed. 3 years in a row. It exactly determined the bottom, it exactly determined the top, and it exactly determined obviously the halving cycle. So in this case, if you compare everything else, unfortunately I do not have a proper slide to show this, but if you compare everything else, the bottom is exactly to the month as every other cycle before. And in this case, this is not the only reason. Another reason is, as you can see, from a technical point of view, it already did everything it could to practically keep this level. As you can see, this was the FTX collapse, and it was like the last thing that we needed. And the amount of capital it gained from the point that it failed from FTX shows that it's very, very low probability that this will go again lower than 15.6 thousand, which was the lowest point of Bitcoin. Now, you can never know for sure. No matter how good you are in technical analysis, no matter how good you are in fundamental analysis, something can come and smack you, like COVID. Who can prevent COVID, right? Who can prevent, again, oil shock? Nobody can. In this case, this is an educated guess. What you can do, you can use technical analysis and fundamental analysis, which is all these things combined, to determine if the probability is bigger that the bottom is in, or there is still chances that it's going to happen. Now, according to what I've seen so far, what I can say, educated guess on my side, is the bottom is definitely in. Somebody else, guys?
Antonio, this is totally financial advice. Police is waiting for you. Thank you very much.
Sorry.
See you guys next week. Keep you around. Goodbye.
Do you mind if I pick this up so I don't forget? Do you mind if I pick this up so I don't forget? Of course. Yeah, thank you. Next time we'll bring it as well. You didn't tell me.
My best. Yeah. It took a moment for me to get acclimated to the settings and whatnot. So there's a couple of artsy ones, you know, that like, you know, that this.
I'm super happy about this. This is really cool.
Thank you.
I'm going to put them on the computer now. And you also have a recording there on this one. Yeah. He'll be very happy about this. He has a big channel. I'm sure he's going to upload it.
Now you got my pronunciation. Kupa and Kupa.
Right.
I had something like with this disease or something.
Yeah, so Kupa. That's the perfect finish. Or a STD.
Section where they were talking about meta. The problem is when this kind of
It could be below us.
you know what? Let me
No financial advice?
Ciao. Mega financial advice.
You never want to be the first one in, waiting for the hammer to drop. So you say, you know what, I'm going to put everything out, and if I see that the regulation is good, I just put everything in again. So this is the problem. But if you ask me if you're invested, you don't care. You know that this is going on, so they can regulate as much as they want. You know what, the best part right in New York, they cannot manage, they cannot take it away from you, they cannot forbid you from using it, so they can do, you know, because put an exception, for example. You cannot stop it. If you're in China and I'm here, I can send you anytime. And no law can stop you from doing it. No government.